Welcome back to the Deep Dive. Trying to make sense of these huge corporate earnings calls like the latest from UnitedHealth Group, it can feel less like reading a report and more like drinking from a fire hose, right? So much dense financial data.
It really is. And the sheer amount of information can sometimes, bury the most important part, the actual strategy. Often, the real gold isn't just in the numbers, but hidden in those opening remarks, especially from the CEO.
Exactly. And that's what we're doing today. We want to give you that shortcut to being really well-informed quickly. So this deep dive, we're focusing only on the operational insights from Chairman and CEO Stephen Hemsley during that UnitedHealth Group Q3 2025 call. Just his blueprint for change.
And what's really striking, I think, about Hemsley's comments is how clearly they signal a major course correction. This isn't just business as usual. It feels like an open acknowledgement that, while the company had slipped up somehow, he kept talking about a keen sense of urgency to fix underperformance.
A keen sense of urgency.
Yeah, and outline concrete actions, leadership changes, culture shifts, even business structure adjustments. It sounds like a really fundamental enterprise-wide rethink.
Okay, let's unpack that urgency then. Because Hemsley didn't really dwell on past issues, did he? He jumped right into the fix, saying it started back in July. What specific improvement paths did he mention?
Right. Since midsummer, it sounds like they've been pushing hard on a few fronts. Bringing in new leaders, for one. Also, strengthening specific businesses that were, let's say, lagging behind.
Okay.
And also just digging in to find inefficiencies across the whole company while at the same time trying to spot new opportunities. It shows they didn't just see a problem, they seem to know where the problems were.
And a big part of this fix seems to be about culture. He mentioned recommitting to the mission and culture, trying to get UHG back to being seen as that innovative leader in healthcare. But he was also quick to say progress isn't happening at the same speed everywhere, right?
That's such a crucial point for anyone watching UHG. He really laid out two different speeds. For the big established part, UnitedHealthcare, or UHC, he said their repricing actions are on track. Meaning they expect to see, quote, solid operating earnings growth from margin improvement fairly soon in 2026. So UHC looks like the steady ship responding as expected to these operational adjustments.
Then you got the other side, the growth engine everyone talks about, Optum. Optum Health, Optum Insight. That's where the story is different.
Totally different. He called these the less mature businesses. And the key thing here is they need investment. Lots of it. Technology integration, training providers, building out new markets. All that takes time and money.
So the progress will be slower there.
Exactly. He said more measured progress for 2026.
Yeah.
And he was really clear that the big payoff from these Optum investments, that won't really hit the bottom line until after 2026.
So UHG is kind of deliberately slowing down, or at least accepting slower results from its main growth area in the short term to make sure the foundation is solid. That's quite different from just chasing rapid growth no matter what.
It really is, and it connects directly to his point about discipline. He said they'll be very disciplined about moving on from those activities that do not fit the long-term plan.
Ooh, that sounds like a warning.
I think it is. If you're a part of UHG, an asset, a location, maybe even a whole business line, and you don't fit this core strategy he's laying out, especially around value-based care, well, Hemsley seems to be signaling it might be time to go.
Okay, that tees up the next big piece perfectly. The strategic refocusing. This is where some of the biggest, maybe most surprising changes are happening, especially inside Optum Health. He said the commitment to value-based care, VBC, is still there, but how they deliver it is getting a serious reset.
Yes, and what's fascinating is that it implies, maybe, that during all that fast growth and acquisition, Optum Health's strategy kind of drifted, that it strayed from the initial intent of the model, as he put it.
Right. And VBC, just quickly for anyone not steeped in this, it's about paying doctors for keeping patients healthy, for good outcomes, not just for doing more procedures, right?
Exactly. Quality over quantity. But when you grow as fast as Optum did, maybe that focus gets blurred. So what are they doing to get back to this original mission?
Yeah, what are the concrete steps?
Well, the headline action is the move to narrow networks.
Wow. Okay.
That's a huge change. Instead of trying to have the biggest network possible, Optum Health is now going to focus on having the right network, emphasizing doctors, locations, services, even benefits that are perfectly matched to the specific group of members they're serving in a particular area.
Narrowing networks. For a company that, for years, seemed focused on being everywhere, that has really big implications, doesn't it? For competition, for choice. It kind of suggests the old, wider model wasn't quite working, maybe spreading things too thin.
That seems to be the conclusion they've reached. They're shifting towards, let's say, network quality and density in specific markets where they feel they can genuinely manage that VBC model effectively, even if it means pulling back, contracting in other areas short term.
It's a gamble.
It's definitely a strategic gamble, but the idea is it protects the core VBC model, which is supposed to be Optum's big advantage long term.
Okay, so that's Optum Health. Meanwhile, over on the United Healthcare side, the focus is still on being super competitive, but the signs look good there. You mentioned improving Medicare STARS scores. Why are those scores so critical?
STARS scores. They're vital. It's basically the government's quality report card for Medicare Advantage plans rated 1 to 5 stars. And crucially, those scores directly affect how much money the plans get paid.
More stars, more money.
Pretty much. Especially getting 4 or 5 stars brings significant bonus payments. It's a massive financial advantage. So the fact UHC's scores are improving year over year, that's a really positive sign about the health of their main insurance business.
And he also pointed out they're already working like crazy on the performance period for the 2028 payment year stars. That just shows how intense that competition is, right?
Absolutely. It takes constant effort, and it feeds right into what Hemsley called the most critical thing going forward: fundamental execution discipline.
That phrase again.
Yes, it feels like a new mantra, a cultural demand coming straight from the top. He did mention the leadership team responded quickly and enthusiastically, which, reading between the lines might suggest discipline had maybe gotten a bit loose before and needed this strong push.
So that execution discipline, it's like the framework supporting all these big structural shifts. But before they can even get to the future growth, there are some major financial hurdles, right? Big headwinds.
Oh, absolutely. Moving into the financials, Hemsley was very direct about the external challenges. He specifically highlighted, quote, continued headwinds in 2026 from the third year of nearly $50 billion in industry-wide Medicare cuts by the previous administration.
$50 billion. Industry-wide, that's a massive number UHG has to fight against even before they fix internal stuff.
It is. And you add ongoing pressures in Medicaid funding on top of that. It paints a pretty tough picture for 2026 financially. But interestingly, despite all that, the CEO still expressed confidence. He thinks they can get back to solid earnings growth next year through that operational rigor we talked about and significantly more prudent pricing, especially in the UHC insurance plans.
Okay, so 2026 sounds like the year they stabilize, absorb the pain, maybe make some tough pricing calls. He sort of hinted at the financials, saying current analyst estimates are a likely stepping off point. But the real prize, the strategy, is aimed beyond next year.
That's exactly the long-term view. The plan is to balance the 2026 earnings, which will be squeezed by those headwinds, and the internal investments, with actions that are really designed to set up higher and sustainable double-digit growth beginning in 2027 and advancing from there.
So it's like a phased approach.
Yeah.
2026,
Yeah.
rebuild, invest, take the hits. 2027 onwards. That's when the acceleration driven by all this current discipline is supposed to kick in.
Precisely. And to sell this story, to build confidence, they're planning an investor conference in the second half of 2026. It feels like they want to show some proof points first, show these pivots are working before they lay out the full long-term financial picture again. It feels quite measured, actually.
Building trust by showing, not just telling. Makes sense, especially after admitting things weren't perfect. Okay, let's get into the final segment then, the results of this big internal assessment the management team's been doing. It's wrapping up now in Q4. What were the major structural themes coming out of that?
Well, the results sound pretty decisive. It's clearly about refocusing on the core. First big theme, getting out of unrelated international markets. They're reducing our footprint in international markets that do not support their main U.S. healthcare goals.
Pulling back internationally. That cuts complexity right away, lets them put all that energy back into the U.S. VBC model. Classic move when a big company feels overstretched.
Exactly. Second, Hemsley mentioned they're still dealing with the financial fallout from that huge Change Health cyber attack back in 2024. They're working on getting back the rest of the loans they made to support care providers then.
Still recovering loans. That just underlines how disruptive that whole thing was.
It really does. Third big theme, the Optum restructuring itself. Optum Health is consolidating locations, finalizing which geographic markets they'll really focus on, all aimed at, quote, operationally advance and scale the leading value-based clinical care business. So again, less spread, more focus, more density. And finally, on the tech and admin side, they're moving Optum Financial Services under the Optum Insight platform. basically bundling their business-to-business tech, data, and financial services together. Should make things simpler for customers and providers, hopefully.
Okay, these are major reshuffles. And they come with a price tag, though Hemsley used some pretty dense language. He said they expect a non-GAAP, substantially non-cash, low single-digit billion-dollar charge. Can you translate that?
Yeah, that's classic corporate speak. Let's break it down. A charge just means they're writing down the value of some assets on their books.
Assets they're getting rid of.
Could be things they're selling, shutting down, maybe international bits, or just tech investments that don't fit the new plan. The substantially non-cash part is important. It means it's mostly an accounting adjustment, reducing the value on paper, not necessarily a huge outflow of actual cash right now. It's like cleaning up the balance sheet to look better going forward.
Okay, so a bit of accounting pain now for future gain. A necessary cleanup before that planned acceleration. And Hemsley wrapped up his prepared remarks, saying the goal is to end 2025 well-positioned for a return to solid growth in 2026, acceleration in 2027.
It's a very clear roadmap, I think. It acknowledges things went off track, and it lays out some pretty specific, sometimes tough actions like the narrow networks, the international pullback, to get things back on course for sustainable growth.
So if we boil it all down, what's the big picture message from the CEO? It feels like a really significant pivot, doesn't it? A move away from a time where they admit they underperformed, maybe expanded too fast, too carelessly, and now it's all about tough execution, consolidation, pulling back in some areas to strengthen the core.
Absolutely. I think the single most critical thing for you, the listener, to take away is that fundamental strategy shift in Optum Health. They are consciously moving away from just getting bigger everywhere towards this really disciplined focus on narrow networks, making sure they truly align with that core VBC mission.
Even if it means shrinking short term.
Even if it means shrinking short term, that's the bet. That this strategic contraction now is what's needed to actually achieve that sustainable double-digit growth they're aiming for starting in 2027. It's prioritizing the quality of growth over just the speed of it.
It really is an internal overhaul, all under this banner of execution discipline. Hemsley made that point, didn't he? That how we go about things in the sensitive area of healthcare is as essential as what we do. Which leaves us with a final thought, maybe. Given all these huge changes, exiting markets, narrowing networks, reorganizing internally, how much friction, how much internal resistance will they actually face trying to impose this fundamental execution discipline across, 400,000 employees?
Yeah.
It's a massive cultural challenge that could really determine if this whole blueprint succeeds over the next couple of years.